we do it because we like it, right? I love to do these funds because they're fun, right? Not because I have to do this. That's the one thing that when I started this, my first fund has no management fees in it. I know what the value is that I bring, and that is worth waiting it through with the investors side by side.
Welcome to the I Own It podcast with Ben Reinberg.
We're live from Laguna Beach at the Ben Reinberg I Own It studios today, and it is Friday, and we have an outstanding guest that's going to be joining us shortly. Can't wait to talk to her. I've been waiting for her to come on. It's a real treat for everyone. Just has a tremendous amount of business experience, and she's an entrepreneur and just becoming a real icon in what she does. Ann Winget, thank you so much for joining us today. It's great to see you.
Thanks for having me, Ben. And I wish I was in Laguna Beach on a Friday right now.
Well, tell everyone, where are you sitting right now? I mean, are you in Texas?
Yeah, I'm sitting in a cool 105-degree Dallas, Texas.
I love Dallas. What a great city.
And I love Laguna. I used to live in Newport Beach, actually.
Oh, well, that's where my West Coast office is. That's where I sit more. So let's get into it. You recently launched a new book, and the title is Pitch the Bitch, Grab Your Financial Future by the Bags, which I love the title. Congratulations on your new book.
Thank you.
By the way.
Thank you.
Let's talk about your story as an alternative investor. Obviously, I am as well. I'm in commercial real estate. I own and we manage commercial real estate throughout the United States. It's what I live and breathe. And so let's share your story as well as your mission to demystify generational wealth building for everyone.
Yeah. So I was fortunate enough to be brought up in a household of money. Both my parents were financial professions. My mother's CPA accountant. My father worked for Pricewaterhouse for 20 years. Before that, they were flipping apartment complexes in the early 80s. They owned and started businesses. So it was just a very entrepreneurial, money was not an off the table topic in our home. And so when I turned 15, I wanted a really expensive pair of jeans. My parents were like, this is our money. Go figure it out on your own. And so I did. I walked out the back door and I went and got a job at a car wash down the road from my house and figured out sales and started outselling everybody as a teenager, part-time in high school, earning almost $60,000 a year, which a 16-year-old should not have access to $60,000 a year.
That's dangerous.
So, I've done stupid things with money in my teens, but, obviously I figured it out. And, throughout my working career, I had a lot of different jobs. I wanted to learn a lot in very short periods of time. So, I've worked in healthcare, I've worked in construction, and I'm 5 generations in oil and gas. So I was going to find my way there one way or another. So, in my late teens, I did start working with an oil and gas company. And, in 2013, 14, if you're not familiar with oil and gas, that was the last time we saw $130 oil.
That's right.
And threw up a bunch of red flags for me. And just because that was an industry I was interested in. And if you know anything about basic economics, you was like, this doesn't make a lot of sense. Then we're probably overpaying for assets and all of the investors are going to lose a lot of money. And the owners of that company didn't feel the same way. And so I said, let's agree to disagree. And I actually took the opportunity to move out to the West Coast. I lived in Newport Beach and Calabasas for a few years, working with other startups in the tech space, real estate, cannabis, medical device, working with companies on how to work with high net worth and accredited investors. I came from an affluent background, so it's just a community I knew how to be around. And so I worked with companies on how to negotiate through their offerings, what made a deal a better deal than another. I helped raise close to $500 million in California while I was there. And decided to go out on my own in 2018, come back to Texas and focus back on oil and gas. In my career, I've raised almost $1 billion in private capital, $100,000 at a time. So I'm really familiar with the retail investment side of things. It's just like normal everyday millionaires. And in 2020, I decided to launch my own firm and launch our first fund in June of 2021. We raised about $17 million on that fund. We fully allocated. We started returning capital to investors and also return. And we're getting ready to launch a second fund on that one and some other things. So it's been quite a ride. A lot of things going on in a very short period of time.
Fantastic. I love that. I mean, obviously, being in commercial real estate, we raise funds and we have syndications. We're raising a new $50 million fund. I think it will grow to 75 or 100. It's all medical properties, which is one of our niches. And so I love what you do and I can gravitate to. And I admire and have so much respect for people that can raise money from high net worth accredited investors. It is an interesting game to play. I've been playing it for almost 3 decades since I was a young man. And it's not for the faint of heart, Kelly.
No.
It's not the easiest in the world, and people think, and you have to grow and develop, and it really becomes through osmosis. You become good at it. It takes a lot of practice. Like it's like riding a bike. So when you wrote this book, like what was your favorite part of the book, and how are you enjoying your tour of this book tour you're on so far?
Well, I got married in the middle of it, so it took a break. But It was a really interesting process. It took about a year to put together, and I wanted it not necessarily to be another financial book where you get a bunch of advice about what you should be investing in. It's more about changing and shifting the mindset for people who keep telling themselves like, I can't do it, or I don't know enough, or, like there's no way that I can be a part of that community. And it just removes that barrier. It brings that, the alternative space in general has been pretty gatekept. Family offices and institutional investors pretty much own most things in the alternative space. Real estate is one of those things that doesn't really have a barrier of entry and anyone can participate in the asset class. But when it comes to private equity, venture capital, and some of the other institutional grade investments, you do have to be accredited investigator with a barrier of entry. You have to have a lot of cash. You need $100,000 minimums or more, but it doesn't mean that people can't know about the opportunity or understand how to invest it once they get to that point. Because ultimately, we're all looking towards financial freedom, whether that is through a corporate job or you're advancing through the position and eventually will end up with leadership, or you're making, high six-figure jobs. Like, what do you do outside of the retirement account? And that's what the book focuses on. And it's based off of this very popular phrase, or it's made popular by the Boiler Room movie, and it's "Don't Fix the Bitch." And in the film, the broker is telling the new broker, like, hey, if you get a woman on the phone, don't talk to them because they'll call you if the stock's up, they'll call you if the stock's down. It's just a waste of time. And, throughout my career, it never made any sense to me that was such like a prevalent sales training thing that I heard in real life, because every conversation I had involved both the man and the woman in the relationship. And if the wife wasn't on board, that investment was not going to happen. That's the way with anything. You want to buy anything, your wife better be okay with it. And so the point of the book is really targeted toward women who are feeling like they don't have any control of that decision making, but in the reality, it is them who is in control, whether it's for themselves or their family. And if they're not in control of the decision, or at least part of it, we basically outlive our male counterparts by 6 to 10 years. So if you're not part of real estate planning and like knowing where the money is, when your partner ultimately passes away before you, like you're going to be left with that, and you need to understand how it all works.
It is so well said. We have a lot of women on our leadership team, and we have a lot of women investors in our funds and syndications. There's a lot of successful women. We realize we've seen it grow in Kellyanne over the last, I would say 10 to 15 years. It's really become more prevalent in our space, especially in commercial real estate. Being a woman in this space is unfortunately not common in raising equity, and nor is the LGBTQ. From what I research, you embrace those aspects in your public content, and I follow, and it's great content. You really stand out, Kellyanne, in a positive way. And I want to let you know that. Have you heard from other women that your confidence has helped them take risks that maybe not have otherwise felt confident in doing?
Oh, yeah. I mean, it's what I speak about most when I'm at any type of conference or summit is, moving beyond that mind hurdle, because we have a place, we deserve a voice. And, for me, I'm not afraid. And that could be just because I was raised in a family that was very supportive, whether that was through like me being queer or not, or just me starting businesses and being a risk taker in general, because I'm very different than my siblings for sure. And who are much safer, more calculated. I'm definitely the risk taker for all of us. And I think that support is what people don't typically get. And so if seeing somebody out in the public, like just being whoever, and confident behind their strategy, I think does motivate people. Women specifically are looking for this. And so if you've ever been to a woman-focused conference or summit in the financial space, like it really is all about like knowledge transfer, and competency support for people who may or may not understand what they want to do next, and less about like kind of the salesy part of things. And so it's kind of a cool thing. So if you are a man and you want like really tangible information from a conference, like start checking out the women's conferences because it is very, very productive.
Oh, that's great advice. I love that. See, I love how you position your company's AWP, Alternative Wealth Partners, a brand around emphasizing diversity and speaking to women and millennials. And it feels like when I've done research, your investor profile is quite different from what most funds seem to focus on.
Mm-hmm.
I know the Alliance Medical Property Fund is a lot different. Do you know when you started that this angle would be so appealing to some investors, or did you fail fast in this approach a few times with other ideas first?
So my career escalated into a point where I was working large family office and private equity. And I wasn't at the top of that for very long because I realized like there's a room full of people that are managing billions of dollars and I'm the smartest person here. That should terrify people. Mm-hmm. Like, and so I took that as like, if they're doing it, then I can do it. And that was my aha moment to start the firm. And when I launched the firm, it was really about just, I don't look at it as far as like, what is the demographical makeup of a small business owner or an executive level individual or family. Mm-hmm. I look at those two things. And through the pandemic, we learned a lot that businesses were popping up overnight all over the country. There were some insane amount of businesses that were started in 2020 with 5 million or something ridiculous. And there were just internet companies, right? Or you have these content creation opportunities for people on TikTok making $1 million a year. You have people on OnlyFans making $1 million a month. Like you have these business coaches that are making hundreds of thousands of dollars a month from their coaching businesses. So that's a whole new demographic of people who now qualify to invest in private equity or these more like gate-kept investment opportunities. And so the people who don't know how to work with them are the people who are controlling most of the money today, right? Which are older white men, which is fine. And those people are still invested in my fund. They were the first dollars into the fund in general. They're just older, just your kind of traditional investor in the space. And it took a year and a half of the spring that we crossed all those from 60-40 white males to 60-40 women or BIPOC, which is really cool to see. And that just goes from who are you having these conversations with? I don't have a bias. And so when I look at somebody, I don't automatically assume they don't have money or can't have money. And so, I'm talking to anybody and everybody that would want to get involved in this. And what is their place in their life? What phase of their life are they in? And it's a conversation that I'm comfortable having, like with a stranger, or somebody who's been introduced me because I have this reputation. Because again, money was never off the table as a topic. It's not taboo to me. So I'm trying to make that conversation not taboo to everybody else.
Yeah, it's getting people comfortable with talking about it and sharing about it and helping them and putting them first, just like we do at Alliance. It's always the investors come first. And so
right.
Your fund, AWP, focuses on 5 alternative asset classes. Share more about each and how you allocate across these for your current funds. Sure.
So like diversity is the base of our strategy, right? We think that if you're diverse enough, then you have a lot of hedge to risk. You de-risk a lot of those things and you can take more risk in one place because you have this foundation in the fund in general. And this goes across any type of portfolio, whether you invest with me or anybody else. Mm-hmm. Your own portfolio should have some diversification. And that doesn't mean like I have a bunch of different stocks. Like, no, I mean like true diversification. You own some real estate and you own the private equity, you own the bonds, you own the so the way that we invest in, we stay diversified in We're invested in oil and gas. We're invested in real estate. We're invested in venture. We're invested in traditional private equity where you have a lot of growth capital, and tech. So we want to have a little bit of risk on the venture side and a lot of security in things like real estate and oil and gas. We have these tangible assets that provide income like pretty much immediately. So that gives, a little bit of a cushion to investors that are in our diversified fund where they're receiving dividends, while we're having the ultimate portfolio grow in value as these other companies fade out, see what happens, grow in value. We have an energy fund that focuses on oil and gas. We actually said there's a ton of tax benefits in oil and gas. So we separated it out into its own fund, and we stay diversified in that fund because we're invested in several different basins, several different operators, and several different types of drilling strategies. So instead of putting $100,000 into one single well and hoping it works out, you put $100,000 in and you diversified across 5 different basins.
Yeah, it's one thing I love about our fund. So our new fund, the Alliance Medical Property Fund, we buy in all different types of medical properties in different regions, high population growth states, and probably great, safe, secure, and profitable.
Yeah, you have to have it.
Oh yeah, there's no doubt. I mean, and the beautiful thing is the foundation of us fund is the human body, because the human body never goes out of style, as I say. And it's true. It's pandemic and recession resilient type real estate. Let's talk about tax benefits, because you touched on it, and I'm also a CPA. So for me, I love talking to you about this. So in our fund and in real estate, you have depreciation, maybe you take bonus depreciation, you have interest expense and property taxes that come off at the property level, and that flows down to your investors. And I'm sure you're aware of this as an expert. Explain to everyone, because not everyone understands oil and gas. I'm approached all the time with oil and gas investors. I actually have someone who's approached me right now for investment. Explain to everyone how that works, because most people don't know.
Mm-hmm. So I love tax stuff. All of our investments are taxable from where, and that's just because I've been doing my taxes since I was 15. So I try to structure this because I like making money, but I like keeping more of it, right? We don't want to pay more tax than we have to. And the cool thing about oil and gas, and it's different from real estate, is that you get to there's 2 sides of the drilling fence of drilling a well. You have your intangible drilling cost and you have your tangible drilling cost. Now, the unique thing that kind of happened in 2017 with the Job Care Act is that you got to deduct that to 100% of the tangible drilling cost with 100% of your intangible drilling cost, which has been around for 12 years. Now that's scaling back because that's starting with Horizon as of the end of 2022. So this is the first year that tangible drilling cost went from 100% to 80%, and it'll go down 20% until it goes away, and then you have to depreciate it over 7 years. But the intangible drilling cost, which makes up about 85% of your drilling expense. So if you have a $100,000 well you want to drill, 85,000 of that is an intangible drilling cost. That is 100% deductible in the first year. So you can reduce your taxable income by whatever you invest into oil and gas up to that percent. And ultimately 100% of that is deductible just over time.
Right.
Then all of the income that you earn off of that well is only taxed at 85% because you're given a 15% depletion allowance, which is kind of cool. So it's very tax advantage. There's also no recapture after 2 years. So like once you drill the well and it's come online or it fails, obviously you take the loss. But those IDC deductions aren't recaptured the same way that they are.
That's right. Yeah, that's a beautiful thing. It's a great tax allocation. And thank you.
It's really good for doctors.
Yes.
It's really good for W-2 and people that have income that can't necessarily be written off like this.
Right. It's because like in commercial real estate and real estate, what I deal with is that depreciation, you can take those losses against other passive income investments. So it's a little bit different, a little bit more advantageous in some ways, a little bit more risky, let's be honest, but it's a different asset class and you're diversified. So it's a smart way to allocate your money. So let's talk about oil and gas. I know your family's been investing for several generations. Give us a little bit of that family history and what are your criteria for oil and gas investments today? Sure.
So we've had, in my family, I come from both sides. Like my father's from Midland, Odessa.
Oh, okay.
And my mom is from the Northeast, but my she was adopted, and my grandparents on her side are where the real oil money is. My father's side were landmen and roughnecks. But on my mother's side, they're from Louisiana. Several generations back of oil and gas landowners, really. So the family assets that we have are oil wells down in South Louisiana in Lake Charles area. And their ranch, Hill Corp, they've been running for a bajillion years. My family was receiving royalties from oil and gas in Louisiana for almost 100 years.
Oh, wow.
Yeah, we call it Gatorama because it's kind of like a swamp. And we own the land of the timber and all that sort of stuff too. But it's really cool to think about like the mineral rights and how that is kind of a generational asset that's really easy to transfer from one generation to the next. My grandfather was the lead petroleum engineer for Getty Oil, and so retired from the military. Him and did a lot of work overseas in the oil fleet, even into retirement. And for me, I like to look in. I don't necessarily do anything in Louisiana, so it's not really the best. Is that in oil and gas? But we have assets in South Texas. We have assets in the Permian Basin. We have assets up in Oklahoma. We're looking at a project up in North Dakota. But if you're familiar with oil and gas, it's like North Dakota is very expensive to drill in and can get pretty complicated. So what we look for is we like non-op. We like a blend of owner-operated stuff, and we also do publicly traded companies. So like all the stuff we have out in the Permian Basin is operated by like an ExxonMobil or an EOG, Devon Energy, and some other small privately owned family office operators. But we kind of have a blend of both. And what we look for when we're looking for oil and gas projects is, can it pay out under 36 months at $55 oil? If it can't just meet that threshold, we don't even look at any of the geology. Then beyond that, we kind of look into like, how risky is this as far as where they're drilling? Have they done in this field before? We don't typically go into any exploratory projects. It's usually something where either I've already have a productive well there and that will be an offset, or I'm very familiar with the operator and we'll get to more production in the field that they've already got booked in. So I try to reduce the risk as much as possible because oil and gas can get really tricky. It's not necessarily knowing where the oil is. We all kind of know where the oil is. It's how cheap you get it out of the ground and how fast. And so that's what we look at now.
So you're focused also on real estate investments. Tell me about your investments in real estate. What do they look like? And are you expanding to include commercial real estate? I mean, give me a flavor of what you're investing in.
Sure. I don't do anything in the residential real estate. I actually think residential real estate is really boring.
You're talking to a commercial real estate guy. I'm not going to deny that comment.
Yeah.
But I'm not going to argue with you, but go ahead.
If you look at any of the other podcasts I've done or any of the interviews, whatever, I do talk about, I think that real estate is really boring. And because the returns are a lot of work and they're not so high, but it is safe and it can be in a sense pretty predictable. I love the commercial real estate space for sure. We don't own a lot of real estate right now. We own 2 properties, both out in Greenville, Texas, and East Dallas. It's kind of a unique opportunity because we owner financed it from a woman. It's a large building that was used as a salon pool, so each of the offices size were for.
Is it retail?
No, it's just, I guess it would be because they're salon suites, like they're hairstylists and makeup artists and stuff like that. So they pay rent on their suites. And so we took it over as that. But when we took over the building, we did some renovations. We turned the inside of the building into a selfie museum and knocked down the walls in some of the building to create a booth rent space so that we could have foot traffic come through and charge more per room because there were like more booths inside of each room instead of one business. And so we took it from doing about, I don't know, $6,000 a month to about $15,000 a month. We owner financed it at 4.5%.
Oh, that's fantastic.
And bought it about $500,000 under market because it was off market.
Right.
And right now we're getting it ready to be a school, cosmetology school. So only a third of the building will be used for the school property. And that'll generate around $350,000 a year.
And you know what's interesting about this is that this is why people think commercial real estate is so sexy, is you're allowed to use your creativity.
Yeah.
Well, I've seen that in my 3 decades of being a commercial real estate investor and at Alliance, my company, is that you have to think out of the box. So
Yes.
you have to be creative. You have to look at saying, how do we change this? How do we serve the community? How do we better the citizens of where we're at? What can we do to add value? And if you can add value and you can open up your lens, what I love about commercial real estate, it's experience man and woman's game. And it'll always be that way. And a lot of it touches on what you just said, because more experience, you can find more situations, more creativity, more resources to leverage into. And so it's a great point, and good for you to get creative. And those things go a long way. You add a lot of value, you increase the NOI by $9,000 a month, and guess what? Stability, and who knows, maybe a 1031 exchange buyer will come in and say, you know what, Kellyanne, I love that property. I'm going to grab it from you.
We're actually getting it ready to sell to an opportunity zone fund, because it's in an opportunity zone. But we're not set up as that, so we can't necessarily take advantage. So we'll sell it at whatever the market rate is now before we switch it over to the pool. One of the things I launched with a partner out of New York is an opportunity zone fund that's focused on community revitalization and venture. So we're kind of stacking a bunch of different tax incentives on top of the capital gain incentive of the opportunity zone. So that instead of just getting a 1.5 or 1.8x return on an opportunity zone, you're now getting like a 3.5, 4x return on an opportunity zone.
Oh, that's fantastic.
Yeah.
Yeah. I mean, our medical properties is a little bit more conservative. It's safe, secure investing with upside. So our IRRs in our history with medical properties is 24%.
Nice.
So I'm very proud of that. And in our new fund, we'll probably, what you're going to see, and here's my prediction, Kellyanne, you can chime in and give me with trillions of dollars loans coming due in 24. And I think we're in a recession. I think it's going to get deeper. I think there's going to be some troubled waters. And I feel there'll be great buying opportunities. So I feel like, look at the Alliance Medical Property Fund, our new fund. Yeah, we projected 14, 18% IRR. I think it's going to change to be that 18 to in the 20s on IRR. Why? Because there's buying opportunities. And, with a fund, diversification, cost of capital is better, purchasing power is better in commercial real estate, and then also scalability. So we see a lot of great things, a lot of opportunities coming. So let's talk about raising equity. It's one of my favorite things to do. I don't do as much, I have people that work for me that do it, but I oversee it and I love it, and I still do it. And once in a while, you worked in investor relations for several years before starting AWP. And I enjoy talking about this because raising equity is an art, and you're that. What's your approach to raising equity in finding new investors?
Well, it definitely goes for any type of sales, anything really. Is you have to find a need and you are the solution, right? So when it comes to this type of investing, you have a person who has money, right? This cash sitting around or a property sitting around, and they have a goal in mind, right? So it's retirement, maybe buying another property or supplementing your income or something. So finding out what the need is and then figuring out how what it is that you are offering meets that need. And spending the time to really understand the relationship you're going to have with this investor long term. Because when you're talking about real estate or private equity, it's a 5, 7, 10-year commitment with this person. And for me, I'm young, so I haven't even been with my partner that long, right? So I'm getting ready to commit to this person for 10 years. And, you have to like them as much as they are going to have to like you. And you have to set those expectations early because you don't want to get, 3, 4 years into your marriage with this person and be like, we hate each other. And there's not really a way to get out. It's not very simple because now your money and your time, both the investor and yourself as a fund manager, are inside of an asset together. And it can get really messy and you lose value if you do not have, an understanding at the very beginning. So taking the time in the beginning before accepting a check is important.
I couldn't agree with you more. In our funds and what we do at Alliance, Kellyanne, it's so important. We actually interview our investors. because we look for a long-term relationship. We look for people that are going to cause issues. We want people that understand our values. And one of the things, our core values at Alliance is transparency, integrity, consistency, and expertise. We call it TICE. And what's interesting about that is we want people that align with our values. It's one thing if you had money, but you said it best. It's true. It's a long-term relationship. Our fund, this new fund's 5 years, will be in and out, could be 6, depending on the market. And at the end of the day, you want long-term relationships. And so one of the things that we do is we qualify our investors and we say to them, we're looking for a long-term relationship. If that's not your cup of tea, we're probably not a good fit. So we'll turn down investors if we have to, because life is short. And as you age, and you'll see as you grow older in your business, you'll see you want investors that align with you. You want to have relationships, because what makes a good day is having great relationships with people. Mm-hmm. And so if you have difficult investors, I've had to kick out investors from our syndications and funds in the back. We've had investors where I didn't like how they treated some of the women in my company. And I stepped in and I eliminated it. I wouldn't allow it. And so it's not about, someone that could pump in $1 million, $2 million, $3 million into a fund or 500,000. It's about the quality of the person, because guess what? When you have great people, they give you referrals and you build relationships, get to know their family, and it becomes enjoyable and it becomes an authentic relationship. So authenticity is really important to us, and I'm sure they are to you as well, because life is short. So any advice I can give you and anyone out there that's raising equity is look for great, authentic relationships. Look for people that do what they say they do. They keep their word. Why? If you have a fund, and like the Alliance Medical Property Fund, you got to call capital and they don't honor their commitments. Well, guess what? You just blew an opportunity cost with another investor coming in. Maybe you had the ability where your staff was spending countless hours chasing this person for information just to fill out a subscription agreement, get their funds, whatever might be going on in that specific situation. So be mindful of the people. It's just like I say, be careful. Show me your friends. I'll show you your future. Be careful who you surround yourself with. It goes the same with investors. Don't look at the dollars. Look at the whole picture of the investor.
Right. And I think that's definitely a shift that's happened in the last couple of years where, and you see this in the real estate market too, like, is it a buyer's world or is it a seller's world? And who has the power, this sort of thing. And I think that going into the situation in the economy now, the power is going to be behind the deal makers.
That's right.
So the people out there who are sourcing these investment opportunities, you're talking about, we have to find 15%. Okay. And you, the investors in the audience today, right? Mm-hmm. Have you ever found 15% on your own for your entire portfolio? No? Okay. You should probably trust the people that spend 24/7 working on these deals.
That's right.
And understanding that it's a lot of work. While they're either in retirement or working their other daily job or, enjoying their free time, the fund managers are out there sourcing and babysitting all of their assets, right? For them on their behalf, and doing it for, a pretty insignificant fee, considering what the investors are getting. And we do it because we like it, right? I love to do these funds because they're fun, right? Not because I have to do this. That's the one thing that when I started this, my first fund has no management fees in it. And that's just because I'm all about the upside. I want to align with the investors, and I know what the value is that I bring, and that is worth waiting it through with the investors side by side.
Well, one of the things we do in how I raise equity is in my mind, I create the Birkin bag theory. Mm-hmm. So Birkin bags are by Hermes for all you ladies out there. For you men listening, if you don't know, they're exclusive and rare bags, or they're custom made. They're expensive, extremely expensive. So I had an investor. I'll tell you a quick story. I had an investor, and she's from the East Coast. I won't name names. Wonderful lady, good friend. And she's become a big investor. And so she invited me over. I was around her area, and she gave me a tour of her condo. Gorgeous condo, great location. And she goes, because she used to tell me about the Birkin bags, so I said, okay. So I walk in. So she says, come in my closet so I could show you the collection. She's like 25 of these, Kellyanne. It's like insane. Okay. Needs 25 bags, but she does. It's like someone collecting cars or whatever your passion is, coins, whatever. This is her passion. So I said, what are these? And she goes, these are Birkin bags. I go, they're all different. She goes, yeah, they're custom made. They're exclusive. They're rare. And I said, oh, kind of like our investments. And she goes, exactly. She goes, that's the lesson. And I go, okay. And so ever since our mindset is, just like you said, is it's exclusive rare. You can't just go out and find a great piece of commercial real estate. I mean, at Alliance, we're office, industrial, and retail experts. But take our focus, part of the last 19 years of our 3 decades of experience we're focused on medical and veterinary properties. Well, medical properties have so many different niches, so many different licensing laws, so many different real estate fundamentals. The businesses are all different. You take an orthopedic practice to a surgery center, to a gastroenterologist, to OBGYN, you name it. They're all different metrics, how you measure their business. And the novice comes in and says, oh, well, I'm going to buy a property. And then all of a sudden he loses a tenant. They realize, oh, my rent's above market. So when we procure a deal, it's just like you do. Any investment, you want someone that's been there, done that, knows how to asset management, knows how to property management, whether it's in commercial real estate. And we have such a large platform of different departments that handle different segments of the investment and the commercial real estate specific property. And even for a fund, I almost find it nearly impossible for a novice to come in and compete. And that's why we have so much demand to come in our fund and limited supply. So I encourage everyone, if you're looking to invest in something, whether it's commercial real estate, oil and gas, and it's not in your lane, it's not in your expertise, definitely leverage yourself into a Kellyanne, a Ben Reinberg, whoever is out there that meets your needs, because you can lose money quickly. And by the way, you look at Kellyanne and myself, and we were talking about tax benefits. You also want to know, how do you maximize your investments? Not only do you manage the risk, but how can Kellyanne or Ben manage, your benefits? That way you make sure you're mitigating your taxes, because this country was based on great investments and tax benefits. And if you leverage yourself and leverage the people, the expertise, the reason why the core value at Alliance, we have that last word, expertise, is because having expertise is a good fiduciary for your investors, especially when you have accredited investors. So I read your New York Times profile that included a story of how you met your wife. Okay. And I'm not sure I really have a question here, but I got the sense that you are authentically yourself all the time, and it makes me smile. Share a little bit about your methodology. I know you touched a little about earlier, but let's talk about it.
How I got my wife on TikTok, or...
Yes.
Well, I'm on all the social medias. I don't necessarily manage my Instagram, but I am on LinkedIn, and I do my own TikTok. And the reason why I am on TikTok is because, again, it goes back to that anyone could be a millionaire today. Mm-hmm. And I'm trying to make this a more accessible space, because the only way that people are invested in this world is like through multiple channels of their retirement account that somebody else is managing and probably also doesn't know anything about what you're actually invested in. And you can just remove a lot of those layers and get down to the real return, which exists in investing directly into the asset.
Yep.
Having a fund manager blanket on top of that helps, because you don't want to manage the asset yourself. But, there's a lot less layers when you're coming that way. But I've kind of just accepted very early on in life that the easiest person to be is just myself. So it makes things a lot easier when you can just wake up and know exactly who you are every day without trying to be something different for somebody else. And it just takes a lot of stress off your day when you don't have to deal with trying to be something you'll never be.
That's well said. So something you and I have in common, which we have a lot in common, is that you're a foodie. Mm-hmm. I am also a foodie. I love eating, and obviously you've lived in the area I now live in, and so I'm going to ask you, what are some of your favorite restaurants and favorite foods whether it be in Orange County or Los Angeles or Dallas or Chicago. What are some of your go-to, some of the things you like that can open my eyes?
So, do you live in Laguna Beach?
Yeah.
Is it Alessa's? What's the Italian restaurant?
Yeah,
Right.
Alessia's good. And then there's a sister restaurant. We've been to that restaurant.
Mozambique.
Yep.
I used to go to Mozambique all the time because
I'm going there tonight.
Yes, they have the best pork chop.
And I'm sitting on the roof.
Yes, rooftop, the pork chop that has like the cherry glaze on it.
Oh,
So
I love that. Cool.
And they used to do reggae night on Sundays, reggae day. And so I would always do that. And Summer House, of course, in Corona Del Mar.
Yeah.
Is definitely my favorite. Those were the places I would go to all the time.
That one's right by my office.
Yeah, it's so good.
What about in Dallas? Like I travel to Dallas and Texas a lot. Is there certain restaurants in Dallas you gravitate to?
There's so many new ones that I'm like have on a list to try. Out here where I live, which is in Argyle, which is kind of north of Fort Worth, Bartonville area, South Lake. Some of the local chains like True Lux is amazing. There's a Mexican place in South Lake that I forgot the name of, but it's really good. It's like across the street from True Lux. Marty B's is really good out here in Bartonville. There's a new place in Denton that's really good. I just forget all these names. I just know where they are.
You gotta keep a list. Come on.
I know. They change all the time because there's like a new restaurant every day. But I travel a lot, and so probably my favorite place to eat in the world is in France. That's just the best food in the world. And probably the best food experience was in Bordeaux. So in Bordeaux, they have a farmer's market, and it's for the locals and stuff. It's a tradition of theirs. Like it's the normal thing for the locals to go to the farmer's market on a Saturday or Sunday morning and eat oysters and drink champagne. Like first thing in the morning.
That's an interesting combo.
It's amazing.
Yeah.
And it's right because you're right by the water. So I mean, it's like really fresh oysters.
Wow.
And it's like €6.
Oh, wow.
Yeah.
What, do you drink wine and all?
Oh, yeah.
What kind of, I'm a wino. I collect wine. What kind of wine do you like?
I like Bordeaux. I like Pinot Noir.
Yep.
I used to be really into cabs, but not recently. I've gotten a lot of like kind of cool new wines that I'm trying. And we had a rosé when we were down. Well, I got married in France. So we got married in Genève.
Yeah. When did you get married?
In June.
Oh, congratulations.
Yeah, thank you.
That's exciting.
Yeah. If you're talking about a good investment, go get married overseas. Like it's so much cheaper. Right. You get way more. And you get to be overseas. So we got really into this one rosé that's $8. And we actually found it at our grocery store. And it's $11 here. So, it's you don't always have to spend a lot of money to get good wine.
Yeah.
If you want to have the experience of oysters and champagne, there is a place in LA that I just found because I was staying at the Sunset Marquee in West Hollywood, and there's a place right across, like down the street from there, called Salty Girl.
Okay.
Have you been there?
No, I haven't, but
the food is amazing.
I'll be up in LA tomorrow for the USC opening football game.
Yes.
I'm a big
you like lobster roll?
I love it.
Oh my God. It is so good.
You and I can eat any day together. Yeah. And you sound like right up my alley. Think about our meal together. Okay. Yeah. We can talk investments.
Yeah.
We can eat good food, drink great wine. It's like perfect.
Yes. I'll be in San Diego at the end of September, actually.
All right. Well, we'll have to connect. You'll have to look me up. Very cool. So before we wrap up, is there anything else about your newly launched book or other causes you're involved in you'd like to share with my audience?
If you're in the Dallas-Fort Worth area, I am doing a little book party at the Dallas Cowboys Club in Frisco on November 6th.
Cool.
So if you follow me on LinkedIn, I'll post the information there and you guys can come join us and be signing some books. If you're in the California area, I'm going to be at the Women's Venture Summit and the Women's Wealthy Women's Summit down in San Diego, end of September.
Okay.
So I can send you the link or whatever, but that's where I'll be if you want to see and meet me and learn about whatever we're working on.
Yeah, definitely grab her new book. Very exciting. What a privilege to have you on today. And what's the best way for people to engage with you? Like, what's the handle on TikTok and Instagram? That way people can stay engaged with you.
All my social medias are Ann Winget. And I think I'm the only Ann Winget on LinkedIn. So it's not hard to find me. And obviously you can go to alternativewealthpartners.com.
Great. Well, Kellyanne, thank you for joining us today. What a privilege. If you're interested in listening to more episodes like this that we just dropped with Kellyanne, feel free and click the subscribe button on YouTube. Click the like button as much as possible so we can let this content, and like anything on the I Own It show, like I say, let it go viral. And to follow me, go to benreinberg.com. You can follow me on all the different social media platforms out there. And if you are interested in investing in commercial real estate and you're a passive high net worth accredited investor, feel free to look no further. Go to alliancecgc.com. We are the leaders in investing in commercial real estate. Feel free to log on to our new fund, the Alliance Medical Property Fund, if you are looking for safe, secure, and profitable returns. Kellyanne Winget, thank you so much for joining us today. What a privilege, and we'll see you soon.
Thank you, Ben.
Thank you for listening to the I Own It podcast with Ben Reinberg. To hear our past episodes and connect with Ben, visit benreinberg.com.